traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Friday, finally, the 21st day of May, and this is the Daily Report, our weekend review. Forex Gold is trading lower today, currently trading at 1176.85. It's had a low of 1166. We are going into the close of Friday's session with approximately 2 hours left in trading. Traders, we did have an excellent week in trading this week. We pulled profits not only on our long position in U.S. spread against gold. We bought in at 12.01. We sold out at 1.229. We also had a euro dollar trade that we entered in at 9.38. We took profits at 9.90. We did have one losing trade. If you recall, I recommended we put on a 1/3 size position, and we took a loss of $12. All in all, though, we made in excess of $70 on the week. It was an exceptional week. Here's what I'm looking at for next week. As you can see, I've put up our Fibonacci retracement. I've put up our Elliott wave. Quickly review. As we went to our record tops, of course, were back. Our first record top, I should say, signaled the end of our wave 5. We went into our corrective wave A, B, and C. We then finally hit our bottom. This is our wave 1, our first impulse wave, our corrective wave, then that large wave 3. That wave 3 was a fortunate wave for all of us, and what I am calling our wave 4, which is our corrective wave. If it maintains the Elliott wave count, we will go into wave 5. Wave 5 will be the last of the impulse waves before we go back into a corrective cycle. Where, in fact, are we looking to buy? For that, I look at two different indicators. I'm going to be looking at candlestick indicators. I'm going to be looking at Fibonacci. Here's what I find interesting right now, traders. Typically, on Elliott wave, you look for wave 4 to correct to approximately 38%, which is right here. In this particular instance, it exceeded that and has had a low that is matched right here at our 50% level. Barring anything unforeseen over the next hour and a half or so of trading, I highly doubt we will see the low at 1166 taken out. Therefore, I am looking at a possible, and we'll see on Sunday, but a possible bottom in this area here. And the candlestick that we're forming right now is doji-like, and except for the fact that this real body is not at the upper end of the range, if it was, it would be a hammer. It, of course, is not. We're going to have to label it a doji. Those two indicators are showing me potential, and I underline the word potential for a bottom, and it looks like it is going to be safe to enter the water back, enter back to the water, I should say, from the long side, possibly Sunday or Monday. What I want to do is to receive confirmation with a candlestick signal. When we have an indication like this, we would need to see a day which we had a red candle, meaning an open and close higher. If it opens below and engulfs, that's going to be an engulfing bullish. This body is much too small for us to get what's called a valid piercing line, or we can have what's called an upside gap. An upside gap, and we can get that, is going to be where the market opens above here and we have a white candle moving higher. One thing we do want to pay note to, however, is the extraordinary downside we've seen in the stock market. Now, according to Market Watch, which is an offshoot off of the Wall Street Journal, and I'm quoting, gold futures ended lower for the fourth consecutive session on Friday as investors dumped the metal, likely to raise cash for their souring investments. One of the interesting things that we get is when gold should be going up due to other factors, but the stock market is heavily selling off, investors will look to raise cash. However, it goes on to say, we maintain a positive view on gold given long-term investor interest, which remains strong. In the near term, however, profit-taking and margin requirements have elevated speculative interest, and that could result in a deeper correction. My personal feeling is on a technical standpoint, we've seen this correction go to the 50% level. We have a trade potential that is a lower risk trade. And when I say a lower risk trade, depending on where it opens up on Sunday, to place our stops below these lows at 1164, 1163, and have a potential to get in on wave 5 if in fact that forms. And that of course is an if, because we haven't received indication as of yet that wave 4, this corrective wave, has ended. Now, gold prices did lose approximately 4.2% overall this week, but when we consider where we actually exited the market, for traders that did take this call, we were in at 1201, we rode our trailing stop, and we're stopped out around 1229. We're going to look at the euro dollar in a little bit. Again, when we take a close view of the market, our Fibonacci retracement, and our retracement is simply going from the low of this particular candle here, which is the beginning of our wave 3, to the high, which is here, and this of course is our double top that we had right in here. What I'm finding interesting is that our Fibonacci retracement 50% level puts us at 1167. Our low today, 1166. To me, that's a very strong indication of a potential bottom. The second thing that's indicating a potential bottom is this doji-like candle. It's almost a spinning top because the range between the open and the close are low. Now, one thing, traders, when you're looking at dojis or spinning tops, these small-bodied candles, color is not important. In other words, if it opens and closes lower, the significant issue is that it was able to close so close to the open and not near the low and not near the high. That's what's significant. We would like to see it be a red body or full body, I should say empty body candle. That would be more indicative of a potential bottom. However, if we do get a candle like this on Sunday and Monday's activity, and I'm pointing out I've added this candle, this is not real, of course, we would have what's known as a three-river evening star. That would be this candle, this star in a morning position, and then this red candle or up day. That is an exquisite or excellent indication that we have a bottom. Let's take a look here. We have a three-river star formation right here on this bottom, and a variation off of that on this bottom here after the small retracement. You can see areas in which you get the down day, small body candle, and up day as very, very indicative of markets forming a bottom. So, traders, we're going to look very, very closely on Sunday's trading activity as well as Monday to re-enter the market from the long side. Also, traders, we have a similar scenario brewing in the gold as it spread against the euro dollar. That's the chart we're looking at right now. Again, we have this same small-bodied candle. The body itself is too wide for me to call it a doji, so I will call it doji-like. It is, of course, gapping below because we can't really have gaps in Forex as the market closes, fixes a price, and then the immediate next day is opened. And that also is indicating a potential bottom in the market. However, it's much, much harder to find resistance and support areas, especially support areas right here in the euro dollar, because we simply don't have a lot of history to go against that. However, we do have that same indication in the euro dollar. Now, the Australian dollar, which we're looking at now, is a different story. That market appears as though it's closing near the lows of the day, currently trading at 1415.30. And of course, that's indicative of the pressure that the Australian dollar is currently witnessing. In terms of the gold spreads that I'm going to be looking to initiate long positions, I am going to recommend staying away right now from the Aussie dollar gold spread. We will be looking at the euro dollar gold spread from the long side. We will be looking at the US dollar gold spread from the long side. Traders, this is the Swiss franc as it's spread against gold. And also here we have that small bodied candle. The other thing that I find interesting is that if we go to look for a support line, and I draw it based on these two tops right in here, we should have tentative support right at around 134,450. And the last gold spread that I do want to look at is as it's trading against the British pound. As you can see here against the British pound, we have no sign right now that that market is going to turn around. Currently trading at 812.72. We don't have a doji-like candle. As in the Aussie dollar, it also appears as though it wants to close near the low of the session's trading. So traders, what are we going to be looking at come Sunday and Monday? We definitely want to look at the US dollar, the euro dollar, and the Swiss franc as it's traded against gold from the long side. We want to caution traders about entering long positions in either the British pound spread against gold or the Australian dollar spread against gold. It's been an incredible week for us. We pulled very, very nice profits out of the market. I think that we've got incredible, significant opportunities right now to enter the market from the long side. If in fact we get some bottom activity at the beginning of the week, we have an opportunity to enter that fifth wave of the Elliott wave count, and that should, according to my calculations, take us to new historical highs. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. Wishing you a good weekend and, as always, good trading. Bye-bye. We'll talk to you on Sunday.